Time now for the Muni Moment. We're joined by R.J. Gallo, Senior Portfolio Manager over at Federated Investors. He joins us from Pittsburgh. R.J., just wanted to get your overall thoughts on sort of the price action that we've seen. Of course, we've been focused so much on the equity sell-off. As we fold over into your world of fixed income, has the sell-off and widening of spreads a little bit felt orderly to you?
Yeah, I think the markets are certainly orderly. I think they're also reacting in a rational way. Trade fears have had a big factor in broader fixed income, certainly in Treasuries for 6 months, for a year. We've been talking about tariffs. We've been talking about negotiations for quite some time. So the prospect that they may be breaking down or at least getting more complicated, maybe pushing out yet again the time frame for a trade deal, very rational for the yields to come down as the risk assets have struggled on the news.
And RJ, as we talk about how this folds into Muni land, one measure, of course, that we look at is that Muni to Treasury ratio. It has fallen down to a near record low. You're at less than 74%. Can Munis richen even further relative to Treasuries, given how low that ratio already is?
It seems like it would be a tough climb for Munis to continue to outperform. You know, typically when yields come down, Munis don't keep up. Typically ratios go higher in a bond rally as Treasury yields fall. You know, this year has been pretty unique. There's been record inflows into Muni mutual funds as an industry. Supply, although picking up from last year was a low level. So supply has been fairly light in a broader historical context. And the fact that the SALT cap raised the effective tax rate to a lot of higher income people in coastal high tax states seems to have supported demand. So Munis have been on a bit of a tear. We think they're probably getting a little tired. As we go into the summer, the technicals are still supportive of favorable Muni relative performance, but I don't know how much richer we can get on the 10 and 30-year part of the curve.
Okay. 17 weeks of inflows into Munis. How sustainable is that? How many more weeks are we going to see, do you think?
It'd be tough to call the actual number of weeks, but I will say this. Historically, Muni inflows are supported by a more favorable bond outlook. So when the Fed largely went to neutral, called off the dogs on tightening, that opened the door to bond fund flows. It's been happening in Munis. It's been happening in taxable bonds as well. If interest rates stay well contained, it's not clear yet whether they're breaking higher or lower from here. I think that supports bond fund flows. So we might have many more weeks to go for Munis and for other bonds as well.
Supportive of the Muni market. Thank you. That was R.J. Gallo of Federated Investors.